You say 2 to 1 and 3 to 1 and 4 to 1 trades are good trades, and the market usually isn't going to give you more than that, but I've seen you do 10 to 1 and more. Please explain how you do that. All right, so with that question, I'm going to show you how I can get a 10 to 1, a 12 to 1, and sometimes even more, a 20 to 1 trade in a market that doesn't generally allow for that. Now, when you look at this, we've got these sections. We were just talking about this here. If you were able to get a short in here, you may get a 2 to 1 out of this. If you get a short right at the top, you may get a 4 to 1 out of this. Now, if you're looking at the markets, they don't generally give you the opportunity to make these massive runs. Taking a monster trade is a little bit involved. Now, you can do it, and I'm going to show you how to do this. But the thing with this is we have to do this on a couple of different time frames. Now, when we look at this one, what is this? We're looking at the 4-hour time frame. When we take a look at the market movement on the 4-hour time frame, let's get my ruler out. We have a market movement, and that is 150 pips. We have a market movement looking at 200 pips. And again, if we do this from here to here, we're looking at 250 pips. Now, this is the 4-hour time frame. The 4-hour time frame has the ability to make market moves that are fairly clean around 200 pips. Now, if we are trading the 4-hour time frame, our stop losses are going to be around 50 pips. So we're still not going to get those really big moves. Now, however, if we look at something smaller, now on the 5-minute, this is an exceptionally large move. This one is massive, and it's not even 100 pips. What your typical move on the 5-minute on this pair, this is the Euro Australian dollar. Your typical move would be something like this. We're looking at about 50 pips. So in a market that is able to give you 50 pips, how are you able to get a 10 to 1 trade on something like this? Now, with this in mind, we know that the 5-minute can max out at around 50 pips, but we know the higher we go as far as the time frames, the longer these market moves are going to be. We're going to see on the 1 hour that these market moves may average a little bit more. On the 1 hour, we're looking at a market move that is really nice and clean, just over 100 pips. We've got another market move from the bottom to the top. We're looking at, again, just over 100 pips, 120 pips. So the higher we go in time frame, the longer these moves are going to appear. Now, the market makes these moves regardless. It doesn't matter what the time frame is. It's just the smoothness of these market moves. If we're looking at a move from the top to the bottom on a 4-hour time frame, it's going to absorb a lot of the noise. If we're looking at this on a 5-minute time frame, that market is going to go back and forth so much that we will be able to take trades in both directions. But on the 4-hour, it looks like a nice, clean, simple move. So let's go back to the 4-hour. What I want to do on the 4-hour time frame is find an area where it looks like we could potentially be taking a trade. So we want to start on a time frame that is quite a bit higher than the time frame we're actually going to place the trade on, because the time frame that we place the trade on is going to give us a nice entry with a fairly small stop loss. Now, that is the secret of doing this. Now, before I even get started with this, you have to know that this is not going to happen every time you try this. You are not always going to get to your profit target, and you may get stopped out 2 or 3 or 4 times before the market takes and moves in your direction. This is a little bit risky. You are going to get stopped out a few times while you're trying to do this, but there is a way to do it, and I will show you that way. We've got lots of different opportunities in here. So we'll take a look at this first one in this downtrend. The market moves down, it pulls back, it gets into the moving averages. From here, I'm going to be looking at a time frame that is smaller than the 4-hour. Now, what we're looking for on this 4-hour time frame is a setup. We've got that setup right in the middle of the chart here. This is where we're looking to go short on a smaller time frame. So from here, I'm going to scroll down to a 5-minute, and I'm going to be looking for an entry on the 5-minute. So with this, I'm going to use this replay feature. Yes, it is the replay feature. Yes, I do know what's going to happen in advance because we did see it on the 4-hour time frame. No, I don't know what's going to happen on the 5-minute. We might get stopped out on the 5-minute 2 or 3 times trying to make this work simply because we don't know how the market is going to move in this one candle that starts to move down. What I want to do is show you the process to this. So the first thing is on a high time frame, we're going to take a look at an area where we can potentially be taking a trade. In this case, it's a sell trade. Now I'm going to switch down to that 5-minute, and we're going to take a look and see what's happening on the 5-minute. The moving averages on the 5-minute are all wrong. I cannot be blindly taking a short trade. I still want to see a signal on the 5-minute that is a legitimate signal to sell this. We are in replay mode, so all I need to do is click a button a bunch of times and we can progress this one candle at a time until we get the situation that we're looking at. This is shaping up pretty nicely. I think I like what we're looking at. We've seen a market high clear across this top. The market dropped below and it got lower than this range. It popped back up and this high now is lower than this high. So we're making a lower high. We moved back down. We made a low that is lower than this previous low, and it did punch through that 200. So from here, what I'm thinking is we could be looking at an inversion in here as the price may continue to move up and then punch its way down. It'll continue to move down if this downwards zigzag is going to continue. So from here, in order to keep myself safe, I'm going to place an order that goes just underneath this candle. So from there, I'm going to place that order. So let's do that. I will use the tools on my chart. We've got the short. I'm going to place a short just underneath that candle. I want to keep my stop loss not too wide. I want this stop loss to be fairly small because that is the secret to making a big trade. Now this one may not take. We may not get the order to sell yet. We may not get triggered, but let's play this out. We are on the 5 minute. So at this point, we're in the trade. The market has taken us into the trade. If I am going to lose, I don't want to lose any money if that's possible. So we're going to manage the stop loss a little bit in the beginning. We're on a 5 minute right now. And remember, the cue from this is on the 4 hour. The market has to move a really long way, which means there's going to be an awful lot of pullbacks along the way. On the 4 hour time frame, we might just see the market kind of do this and then it hits our target. Yay, perfect. But on the 5 minute, what's likely to happen is this. The market is going to do this on the way down, and we want to be ready for that. So our stop loss can't be super tight because we are going to get stopped out of the trade. We have to be aware that the market is going to make a pullback, maybe a higher high along the way. It is going to do 5 minute stuff in its own time with a overall direction to the downside. So how we're going to manage that is as this market starts to move, we're going to start going up a time frame. We're going to go to the 15 minute, and then ultimately I don't want to manage it on the 4 hour, but I will be managing it on the 1 hour time frame. So let's continue this. We'll see the market if it pulls back and it gets us into or out of a situation. Right now, we're looking at a pullback. I don't think we're going to be taken out just yet because this is about as nice of an inversion trade as it gets. So I think the market will continue to drop out of this. And as the market does that, it pulls back into those averages. Now we have a nice, decent drop. So from here, what I'm going to do is switch time frames. I'm going to that 15 minute time frame. And what we're looking at on the 15 minute is a really nice market move. It's moved down, pulled back up, and then continued to move down. So I could consider moving my stop loss at this point. Now we're looking at the 15 minute, but remember the overall movement has to happen on the 4 hour. Now let's go to the 4 hour and see where we can target on that 4 hour. Now we want a big trade. So this is going to be our first initial target is right in this area here. So we're looking at these lows as potentially our first target. Now I want a big trade, and this is pretty close considering. If I were to place a trade using the 4 hour time frame, this may only get us about 1-to-1. I'd want to find a way to get more than 1-to-1, and a way to do that is using leg length. So let's take a look at some leg lengths. There's a leg length in here. There's a leg length in here. We've got leg lengths all over. So I'm going to take the most recent one, which goes from this high to this low. And from here, this is the top of that pullback, and we could potentially see the market make a move down to this leg length. So let's mark this off, and we'll extend the target to that bottom there. So we have this monster trade. We've got a 14, almost a 15-to-1 reward to risk ratio trade. Now, this may not happen. It might not result in that. So let's get rid of the leg. Let's move back down to the 1 hour. And on this 1 hour, we're going to start managing this trade. We're going to start watching this trade. I think we were down at the 15 minute. 15 minute is starting to move. We got the pop back up and move back down. So I could potentially start to manage this. Again, I don't want to get too close with the management just yet. I do know we're looking at an overall movement on the 4 hour time frame. So the market might make some bigger swings on a 5 and a 15 minute. So for the beginning part of this, I want to keep my stop loss fairly wide. So let's progress this a little bit. So as this trade continues to move down, this is looking really, really nice. From here, I think I'm going to go to the 1 hour, and I'm going to manage everything from this 1 hour time frame. Now, what I'm seeing is a super clean market move in here. It goes from the top to the bottom with zero pullback. So looking at this on the 1 hour time frame, I would expect a pullback into these moving averages. So because of that, I'm not too keen on moving my stop loss just yet. Seeing a market make a move from all the way up here to all the way down here without making a substantial pullback is a rare thing. It's not something we're going to see. But when you see a market make a move from A to B, we see this market go from here all the way down to here. It makes pullbacks along the way. For that market to move all the way down without making a pullback, that is an unlikely scenario. So I'm not going to manage my stop until I get some kind of a pullback. We might not. We might get the market moving all the way down, but this pullback may happen earlier or it may happen closer to the middle of this. So let's just play this out. We get this beautiful market move. I'm really liking how this market has moved. If this is the pullback that we're looking for, I want to see the market get under the swing low that it's made. Then I will be happier to adjust my stop loss. And with this candle, we did that. So let's adjust the stop loss to just above that swing high. Now at this point, if we get stopped out, we'd be stopped out about 3 to 1. So that's going to be a good trade whether we win or lose. Now let's continue this, and this is looking really, really nice. Now on the 1 hour time frame, what I tend to do is as we get closer to the targets, I tend to move my stop losses a little bit tighter. So from here, I may start using the high of this 1 hour candle because we are so close to getting that target. This means that I'm not going to give back too much if we get stopped right now. So let's see how this continues. It is pulling back. And we are looking as though we are stuck in a bit of a range. This is a sideways range. Now, because this is a sideways range, the market can do one of two things. It'll shoot down or it'll shoot up as it breaks out. Because of that, I am going to manage my stop a little bit tighter. So let's give it another few candles and see how that goes. Well, there we go. We are out of the trade. And with this trade, we made, I'm going to call it 15 to 1. It's just nice and round. We've got this 14.49 to 1 trade. So what we're looking for is that 4 hour setup as that 4 hour pulls back, and the 5 minute entry going to be way over here. So we're looking at that 5 minute entry, and we ended up taking that 5 minute right in here. So that is how you can get monster trades using a higher time frame for extended targets, using a smaller time frame for a smaller stop loss, and using some of the middle time frames for trade management. Now, I was going to do an example of a long trade, but we are running out of time. So I'm going to do that in a second video. And in that second video, I will do the same kind of analysis that you saw in this one. So watch out for that video, how to catch a monster long trade using multiple time frames.